There's currently about 700 million ounces of paper outstanding and only 88 million ounces available to deliver. What if I told you that there isn't enough gold and silver to back the markets that trade them? And what if I told you that the main supplier of silver to financial markets is no longer doing so after suppressing the price under $40 for the last 20 years? There's not enough silver in London. There's not enough on COMEX and probably not enough in Shanghai either. This is not a speculative mania. As you can see from the chart of the price and open interest has been declining to very low levels as the price rises. Now, this doesn't normally happen. Normally, when the price rises, more people get on board and they buy it as the price rises. No, this is a squeeze on paper contracts which simply cannot be delivered in the physical silver being demanded. And we look at the second chart, it confirms the managed money category, which is mainly hedge funds, it's almost entirely hedge funds, have the lowest long exposure for the last 20 years. This is really remarkable. And it puts a lie to people who think that this is an investment and all the investors are on board and they bought it and it's time that it's going to be shaken out. No, this is very different. This is a squeeze on the system. It leaves billions of paper contracts, billions of dollars in paper contracts, which bullion banks and market makers are desperate to close down. They have wholly inadequate inventories. If you look on COMEX, for example, there's currently about 700 million ounces of paper outstanding and only 88 million ounces available to deliver. The situation in London is worse. And with significant premiums now in Shanghai, physical silver is now draining east, and Shanghai now sets the price. This isn't really a price story. It's a structural flow in how precious metals have been and still are being priced. Does this mean the West is running a fractional reserve metal system? Of course it is. And through the crisis in the silver contract, it is this which is now being challenged. Now go back to late September, when China suspended rare earth exports. It turns out that from that moment, she also suspended silver exports, just as America designated it as a critical mineral. China was not going to supply silver so that America could build her own stockpile. And within 2 weeks, London faced a delivery crisis, which drove up lease rates from their normal level of 1 or 2% to 40% on the 9th of October. There was no silver available for delivery, and trading was even suspended for 2 hours. Big bullion banks have resorted to borrowing silver from wherever they can get it, which eventually they have to return to those that borrowed it from, lessors, and even ETFs such as SLV. Backwardations appeared between London and New York, sucking metal out of COMEX, where stocks registered for delivery have declined to critical levels. This gives paper markets a huge problem in an illiquid market with the main liquidity supplier, which is China, having withdrawn from the market. Silver cannot absorb delivery stress the way gold can. We now see significant premiums in Shanghai over London and New York, and this tells us that physical silver is now flowing out of Western paper markets into China. Not only is the silver squeeze continuing, but with Chinese institutions and savers buying, it will only get worse, driving prices far higher. And the more obvious the problem, the more reluctant holders of physical silver will be to sell it, not until prices are far higher. Just to make it clear, the system only works if most participants never ask for metal. Now we're seeing physical metal draining from London. We're seeing lease rates spiking. We're seeing backwardations and Shanghai premiums depriving London and New York of physical silver at a crucial time. This is subtle but huge. It suggests Western paper pricing no longer sets global reality. It all amounts to a run on physical silver, which is crucial to industry and increasingly seen as a monetary metal, particularly by Asian savers, whose parents and grandparents remember the yuan being on the silver standard before Mao Zedong, and throughout Asia, also, the circulation of Maria Theresa dollars as recently as the 1970s. So delivery demands will almost certainly accelerate. Vault inventories are insufficient because most of what's in vaults is actually hoarded silver, not available for deliveries. Cash settlement may eventually be forced to prevent counterparties failing, in which case credibility of the entire commodity paper system will be damaged, most likely fatally. So the real story isn't that silver recently spiked and then crashed. The real story is that the paper system requires people not to want the metal, and increasingly they do. The paper-silver crisis has just started, and if you think that buying a silver ETF covers you, think again. You don't own physical silver, and big banks raid ETF stocks to meet their obligations. Own it yourself and store it outside the banking system in secure, insured vaults. Thank you.